The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good morning, traders. Happy Tuesday. Welcome out to the Tradespoon live trading room opening bell again. My name is not Vlad Karpel. I am filling in for the opening bell all week. Vlad is either in Miami or skiing in Europe, I think. Those are the two theories that were proposed yesterday. One of the either sounds all right, I guess. I mean, I think maybe at this point Miami sounds. I'm tired of snow. Good morning and howdy to you, Bob. Good to see you. Hi, Phil. Thank you as always. Good morning, everybody else. My name is Scott Beck. I'm the head trading coach here at Tradespoon. I'll be your host. Vlad has volatility. That's it. Bill, that's it. Good morning to you. All right. Here's a quick run through of our housekeeping matters. This is me trading for actually going on 24 years and teaching for about 20 of those years. Now, I used to feel like, oh, I'm going to brag about my experience, and now I feel like this just makes me seem old. Here's the disclosures. Be careful out there. Trading's risky, options especially. We're not advisors. This is for education. Have a plan, manage your risk, manage your psychology, and life will be fine. Okay, let's get into it. Let's get into it. I am on Bill said. Come on, Bill. I like to, in my mind, still see myself in my mid to late 20s. Here we go. Futures were doing great this morning. Woke up, took a look before I showered. I'm like, oh, okay, we're okay. And then, we got, we're I'm not going to say failing to launch because we don't know yet, but it's struggling to launch, right? Yesterday it was looking pretty good, and then it just sort of fizzled, and today morning started okay, and it's just kind of, again, fizzling. Stock futures are muted, bond yields rise. Home prices dropped for 7th month straight. I'm not that concerned about that. I think we all knew, at least 10 to 15% was coming out. It ran a little hot. And with the prices increase that we saw, coupled with increased mortgage rates, and not just like, oh, we're up a point. I mean, we went from high 2s, low 3s, up to 7. I haven't looked recently, but it seems like we were kind of 30-year fixed. We're sitting in that 6 to 7%. That's a significant decrease in buying power. So obviously that's going to have an impact, and they already had moved at an unsustainable rate. So this is not, again, when we look at the different economic components of the market and what's having an impact, if we see sales slow down and drop, even go a little negative, that's has to happen. If that happens, are we going to see some consumer confidence wane? Yes, we are. Of course, people are less confident when inflation is rampant and um, real estate prices are coming down, and the Fed continues to, I mean, the Fed has now really changed to a markedly dovish tone, which is that's going to be helpful. We all know the old saying, "Don't fight the Fed." If you don't know it, you should know it. Um, I mean, literally, when the pandemic happened, the Fed coming out and taking its first, uh, action was literally the bottom, like literally called the bottom. Very interesting. um, but employment stays strong, right? No kinks in the armor yet for the labor market. I mean, there's those standard, like we're a little suspect sometimes of the reporting, and oh, actually, we're going to go back and revise, and it's better than we thought, or it's worse, whatever. Um, so that labor component still in place. The corporate, we haven't talked about that a lot, but if you look at the earnings, it's not like all of a sudden, the earnings have dropped off, and even the guidance, right? So the earnings have stayed strong, and the guidance has been okay enough. It's not like the guidance has been lowered substantially, and the corporate America is saying, "Oh, here comes the shitstorm." Pardon my French, but it's still an interesting mix of things. There's still a lot of concern. One of the concerns, I think, has been the prevalence of media coverage for the layoffs that have happened. They're high profile layoffs, high profile companies. But it's very isolated. Not, I mean, it's mostly isolated to tech, right? Tech companies. Again, here you go. Walgreens profit beat estimates on strong pharmacy results. So okay, all right. Uh, but don't let doom and gloomers uh, unnecessarily bias you one way or the other. This is the kind of market. Again, it's so important. The saying I use is recognize the difference between what you think, what you feel, and what you see, and then throw out what you think and feel. Doesn't matter. If you find yourself saying, "Well, I think this is gonna stop and reverse that," go back, put a C, SEE, put a C in that statement. I see this happening. Or at the very least, say, "I think X because I see Y." If you end a statement that just says, "Well, I think we found the bottom," really? Based on what? I believe we're going up from here. Based on what? What facilitates and promotes that belief? And if there isn't something that you can see that backs it up, then reevaluate. That's today's soapbox advice. That's about it. Oh, John Wick. I'm a huge John Wick fan. I had never heard of it, and all of a sudden, I'm like, "What's this?" I turn it on cable. Magic. If you haven't watched, those are, if you like a good action movie, and who doesn't like Keanu Reeves? Okay, that's about it for the news. Let's go take a look at the economic calendar. Uh, da, 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 da. Today, retail inventories are up a little bit, but again, the last bit of news I read about the retail sector said that the inventories are actually in a pretty good place right now, all things considered. So the fact that they're up marginally is not that big of a deal. Um, home price came back as expected, but down. Uh, yeah, and we'll get some consumer confidence. There's the opening bell. We'll get some consumer confidence numbers here in just half an hour. Expecting a drop. Again, nothing out of the ordinary based on the conditions that we're seeing, but we are definitely expecting a pullback there. Tomorrow, we have some Fed speak today, some Fed speak tomorrow. I think we know what the Fed is doing. I think that at this point, there's a very good chance that there is no increase, right? No increase at the next Fed meeting, which is when? Let's see, we just had one. We just had one last week, 22nd. 1, 2, 3, 4, 5, 6. I think it's April 3rd. Does that sound right? I'm not going to go look it up. If anyone wants to real quickly on another screen, they have Google FOMC schedule. I believe it's April 3rd. So I mean, not April. May 3rd. Sorry, that was my bad. May 3rd. April 3rd would be next week. Not that soon. Next week. Okay. And what are we seeing here? So the model is still bullish, but it's now saying, well, we may have to make one more run at it, right? We may see it go up a little bit. We may see it pull back. I'm actually see this very much as still bullish, right? Where it's like we have a low, we have a low, we have a low. So if this one tries but can't and then has a mild pullback, great. I think this could be the one. Remember that our Aprils tend to be bullish before we get to the summer doldrums, the sell in May and go away mentality that we hear so much about. If you've ever wondered where that comes from, that comes from the cyclical fact that over the last 25, 30 years, May and June tend to meander sideways more than anything. So do we need to have more sideways strategies ready to go? Covered calls, butterflies, calendars if the volatility drops, iron condors. Vlad's a big fan of iron condors. He tends to do them a lot around earnings, but he also will do them in sideways markets. So yeah. But this prediction this actually makes sense to me. We're a little. This is what I mean when I say that failure to launch, where it's like it's trying, it can't get going. The buyers are like, oh, we couldn't do it. Sellers make a run. If we get the higher low, that next move, great. I'm still on board with this, but we have to be patient. Either A, if you get into a trade, giving it a little bit of room to pull back without just panicking out of the trade, or B, being patient and waiting for the next set of entry opportunities. That's SPY. Sorry, you know what? Give me 1 second. Let's jump in. Oh, Bitcoin. Someone asked about Bitcoin yesterday. Honestly, what do you see? I see a bullish chart. I see a big surge in bullish momentum. I see that it paused, hit a new level of resistance up here around 29. Hadn't been there for a while. On the pause, the sellers are making a run. They're testing. How are they doing so far? Not great. 3 days of selling. Where has it gone? Nowhere. It's barely below the testing of the new resistance level. So for me, if I were bullish and wanting to trade bullishly, I'd say 26. That's where I'd want it to stabilize by. But I would be okay with it stabilizing by 25. This old resistance, new support. I'd like to see this breakout candle here, this nice big candle. I'd like to see the halfway point hold. That's a common technique, right? When you see a candle like this that sort of accelerates the trajectory, if it can hold that middle point, that's more bullish, obviously. But if it can hold the breakout, which occurred here, where we tested near 25, pulled back, 25, pulled back, hit 25. We stalled 1, 2, 3, 4 days where it's like trying, and then bam, it broke through. And you can see that after it broke through, ran out. And I'm not saying this because I'm so interested in trading Bitcoin, but I'm wanting to emphasize and illustrate chart concepts, right? Technical analysis concepts. This is very much normal in what it represents. So you might be looking at a different stock, same kind of thing. It breaks, it runs out of steam, it pulls back. This is why I don't like trading breakouts personally. To me, a breakout is a setup where I'm like, ooh, look, it broke out. Now what? Now let's see the next cycle, meaning give the sellers a chance to come in, see what they do. If they come in weak, tepid, establishes a higher low, a new support level, okay, everything's in place, locked and loaded. Let's go. Okay, let's look at the SPY for our opening prices. Yeah, you can kind of see it, right? Like it's just a little uncertain here. So if you got into a trade on this initial one, you're still at the same place. So it's not like you're wrong. It's not like you need to panic and shut this down. We might see this, pop a little again and then pull back a little bit, find us. This is what the model says, and then from here we look to go. Okay, this is a bit of a choppy bit of price action. Okay, let's go back to our opening range. See if I'm missing any questions. It's quiet out there today. You guys feeling okay? How's everybody feeling? How are you trading? What's going right? What's going wrong? What kind of risk are you willing to take? Give me a little insight. This is a temperature check. Help me understand how you're feeling about A, conditions, B, your ability to trade said conditions. All right. Okay. Cash on the sidelines, Jeff said. Bob said, still sleeping, boring market. Micron selling chips below cost to manufacture. Thoughts? I don't know. Did they say that they're just trying to like clean out their inventory of old chips? What's the thought? Did you read the rationale behind why? Do they have like a glut of inventory? PC parts are half off now. Yeah, I mean, I guess with the tech sector the way it's going, should be able to pick up some good deals, right? Interesting. Mario builds his own P. I tried that once and it worked okay, but man, it was a hassle and a nightmare. I don't know enough. I'm like, oh, I'll try it. Nah. If you know enough, yes. If you don't, you'll find yourself. I love it though. Okay. Here's the question, Mario. Have you built your own laptop or is it only desktops? Because then I'm impressed. If you built your own laptop, then I'm like, okay. Okay. Built parts of MR, no laptops. Well, there, life goals. All right, what's next? Let's get back, then we'll get through the watch list. So SPY, still bullish, but certainly demonstrating the potential for just a little kink in the momentum. And the looking thing, right? Like, well, we might try and then pull back and then we can go. Which is reasonable, right? Which is reasonable. Okay. Next, what's next? Let's go DIA, then IWM. So DIA has been in line with the others. IWM, definitely the laggard of the group as of now. Very similar forecast, maybe getting a little bit more upside, a pullback. This I would describe more as neutral. I'm not surprised if we do see more bullishness out of the S&P and the NASDAQ. I think that the tendency is to see more neutrality and sideways action on the Dow. The missing component, right? The missing component of all of this is Russell. The Russell has small caps have been really weak so far. And even here you can see, maybe. Come on. You have my sympathies, Mario. That's a tough thing, man. Aging parents is that's a that's a tough scenario. Well, I don't know why my Tradespoon stopped working here. Give me a second. There we go. Oh, no, that's S&P. Let's go back to IWM. I believe it. I believe it. My when my dad passed, my mom came and lived with us, and she was later stage Alzheimer's than we realized, and yeah, she got a little cranky. My wife and I said she wouldn't do well in a home. All right, let's see here. Yeah, look at that, just still grinding down, but if it turns sideways and can come a little bit, we would love to see small caps participate. Right, we would absolutely love to see small caps participate. That would definitely give us more of an indication of breadth and a stronger market to rely on. So, lastly, here it is. This is that April rally that we're looking for. That tends to be one of the better. Right, not as strong as this October rally, of course, but pretty much one of the better ones from a cyclical standpoint. Great, let's see what happens. It's nice to have that. I don't look at this like this is predictive, but I do look at this and say it is cyclical. And cyclical, if it's happens enough over 25, 30 years, we can definitely call it a pattern. 30 years. Since 1993. Very nice. Okay. Let's get to the watch list. What's actually showing us the potential for trading? Alcoa. Not yet. It's aluminum with Alcoa, but it's had a huge drop, 55 to 40. 20% right there. So it had a 20% drop in 2 weeks, and then it looks like it's stabilizing. It's stable. You're not like, hey, I found this great stabilizing stock to trade. You're like, wait, what? Don't you want to find a great bullish stock to trade or bearish? Apple, there it is. This is what we said we're waiting for. So we want to see an actual classic consolidation pullback. That just is better and easier to trade, in my opinion. Someone may disagree, but they're wrong. This is better. What do I want to see? I'd like to see this pull back maybe another day or two, and then it's in a great spot. I mean, Apple is definitely setting up right now. So let's be aware. Adobe, very similar. So we're seeing the tech sector, maybe moving into a viable position. ADI, only I don't like ADI. It was pretty strong for a while, but at this point, we have new leaders in the chip arena, at least in my opinion, from a trading standpoint, which would be AMD and NVIDIA. Archer Daniels. Oh, look at Archer Daniels. Kind of a double bottom pattern for me, right? If you look over here to the right, we seem to maybe have this double bottom. If we can convincingly break through here, that would also be breaking through the consolidation, and then a pullback. That I would think, okay, I'm willing to trade that. Possibly, if you're looking at something longer term, even get an investment. Speaking of AMD, there it is. How far would I feel? Again, there's this halfway point. So I would love to see it stabilize about where it is now, 92.5. We're at 94. As long as this volume continues to slow down, right? This is kind of a big candle. We're down almost 3%. But if we drop on a bigger candle and we don't have an increase in volume, I can live with that. I'm okay with that, right? We pull back a little bit. If it slows into here and this stays below average, and then we get the turn, love it. I'd be willing to let it drop down to here, where the old resistance points here, here, and here are, right? Old resistance, new support. And that's saying if this more bullish level can't hold, but there is my range. So this is why you hear people say, well, support and resistance isn't a point or a line, it's a zone. A zone. There's my zone that I'm looking for. AMD, Apple, both on the shopping list. Amazon. Whoops. No, we're not trading you, Amazon. Amazon, I still like Amazon. Look at this. This is the selling cycle, clearly, when you look at this stochastics. Now, what have the sellers done? They've had 1, 2, 3, 4. This is the 5th day. 6, 7 out of 8, if you count all of this. And what have they done? Nothing. Nothing. Sitting on top of the 50. The 50's holding. Great. If this turns from here, I absolutely think we have a chance to make a run back up into this like 108 to 115 level through here. Amazon's on my list. Amazon obviously is a big part of consumer discretionary. Yeah, great. AXP, yeah, financials aren't there yet, obviously, right? They're not there yet. They still have some shaking out to do. Boeing, industrials are not there for me. Baba, oh, look at the Chinese stocks, 8% today. What the hell? what's the news out of China? Anyone know? We'll see if FXI does the same thing. Caterpillar, nope. There's nothing in the industrials for me yet. We'll see. John Deere probably shows the same thing. Oil, nothing in oil yet. Costco, yes. I like Costco. Costco's kind of quasi discretionary, quasi, non. It straddles that consumer area. So, yeah. DBC for energy, nothing there yet. John Deere, industrials, no. We were asking earlier, we're like, what might participate? It's definitely not industrials, certainly not financials as of now. So make sure we know where money is flowing, right? That's a very big piece of all of this. Disney. Oh, did you see Disney's laying off like 7,000? Come on. Come on. You're doing a disservice to Walt and his legacy. No, I don't know. Trying to save, I think they said they're trying to save 5 billion. Here's what Bob said. Alibaba to split into 6 groups and explore IPOs in a departure from Jack Ma. Oh, wow. Okay. Interesting. Very, very interesting. Disney's like any other corporation. They are rodent control. Love it. CDN. Yeah, I'll take a quick look at those. Mark, let me pop through the watch list here, then we'll take a look. FCX. Yeah, metals, materials. There's not a lot there. There gold and silver kind of were moving alone, but not really anything else. Ooh. Now look at FTX. That might be a confirmation if you are okay. It definitely held. So I'm going to be looking at that closely. If it stays like this, that might be an opportunity to grab one. Let's just see real quickly what Stella thinks about that. So what have we liked so far? We've liked Apple. And so does Stella. We've liked AMD. Same. FedEx. Oh, Stella. When Stella and I agree, life is good. Two-year treasury symbol. I don't know that. Anyone know that? Two-year treasury? I don't know it offhand. FXI. Okay, so yeah, that was definitely just for Alibaba. FXI is up 3%, but that's not 8 or 9. Gold has been bullish, but now it's kind of like looking a little volatile at the top, maybe. Goldman, nothing in financials. Small caps still struggling. Jets, not really helping the consumer discretionary. MasterCard, financials, still struggling. Meta, put it on the list. Put it on the list. Consumer, no. Communication services. So technology, communication services, maybe a little bit of retail / consumer discretionary. Reluctant in financials, reluctant industrials, staples and utilities. Also, energy is down. The only other place may be healthcare. Maybe we should take a look at that at some point this week. Marvell's no good, but Microsoft is. It's on the list. Netflix. Ooh, communication services. Netflix on the pullback, possibly. NVIDIA looking magnificent on the pullback. Add it to the list. Oracle. It needs to pull back, but I'm keeping an eye on it. QQQ. You can see exactly why we're saying what we're saying there. Starbucks, no good there. Come on, Starbucks. You're better than this. There's silver showing some strength. I actually think silver looks better than gold now, even though gold had been showing more strength. Semiconductors, semiconductors from a ETF looks okay. It's doing this because of NVIDIA and AMD. And this still looks this way. They're carrying the load, those two. SPY, let's pause for a second and take a look at our opening range. So you can see yesterday we talked about the opening range, right? And I said whichever way it breaks. If it breaks, there's a very good chance it fills this gap, and it did. It broke, filled the gap. It popped off of it and then came back down to it again. So now what? Same thing. There's our opening range. If it breaks to the upside, we're back up at 398. Breaks to the downside, we might be back at 393, and that's sort of what the model said. There is a possibility that happens. Okay. Where were we? Tesla. Let's get out of the 5-minute chart. I don't know. I mean, I know it's kind of a cultish stock. There's no trend here. There's no, you know, I'm really feeling like I might bounce Tesla out of my list. Natural gas just sitting at lows still. Visa sideways. The VIX. So the VIX looks bullish. That was bullish. Even though the market didn't do much, the VIX rolled over. We haven't taken these lows out yet. We took out the body lows, but not the candle lows. Financials, you can see why I'm reluctant. Industrials, that's why I'm reluctant. Staples actually is showing a bit of a, it's broken out of its consolidation range. Okay, let's be aware of that. That's weird. I think the consumer arena, there's some potential on either side. Okay. That's the whole watch list. Let me look back. Got a few symbols coming in to take a look at. CDNS. Let's take a look. Maybe. There we go. CDNS. Yes. Okay. Does have options. Average volume 2 million. Yeah, I like it. Nice steady uptrend. Buyers hit some resistance. The sellers have the floor. What are they doing with it? Not much. I love weak sellers. Is just a beautiful way to enter a trade for me. I don't necessarily enter on strong buyers. I enter on weak sellers because weak sellers tends to lead to strong buyers, and I want to be in front of them, not after them. I do like that one. ALGM. ALGM. Whoops. Similar, but this one you can see is really, if you look at this last I don't know, 2 months, there's not a lot there, and there's enough strength other places that I would be interested in it. Next one, PANW, Palo Alto. Yeah, I mean, honestly, these look okay. It's not like I'm not like this still is uptrending, but it's the same thing. The last 2 months has been a little tepid. I still like these all. None of these are problem. Fortinet, FTNT. Fortinet, definitely. I mean, it still looks good. It's at new highs, but I would need to wait for this to pull back. Carmen asked for CHPT. Charge point. Ooh, see, this one to me, it's really down. It just, the sellers pushed it. Buyers tried. What did they get? 3 days. 3 days. They tested at the 50. They failed, and now the sellers are in again. So for me on that one, there's just not enough for me to do anything with. UNH. Jeff says, yeah, maybe my pleasure, Mark, no problem. UNH, maybe we do have a health stock to be. It's trying, right? It's trying. If this was your consolidation line, it did get through, it did come here, and it did turn. It's just, is this going to get some more momentum? I'm open to some healthcare stocks. I don't know that I'm anxiously looking to find some, though. And GE, yeah, GE just a nice, slow, steady grind higher, right? Yeah, yeah. Yes. Okay. A bit of a newbie on the. Where is this list to be found? Mark's asking. Right here on the side panel. That's the list. Take a quick screenshot or look at the recording. This is the full list. And then I'll scroll down a little bit. It's not posted anywhere. This is just kind of like an ongoing list that we cultivate, look at, manage. I try to make that the one part of the exercise of what we do when we meet together. So there's the rest of it. Good question, Mark. Oh goodness. Bios. CPRX. Yeah, let me take a look. CPRX. Okay, what's the bottom line? As we said, bottom line, trade what you see. Yeah, you're right. Right, it has kind of. This is what I'm looking for. I need to see this. See. I don't feel, I see. What did I see? I saw a consolidation coming down. There's my consolidation. It broke it. Came with some volume. I always like to see that break accompanied by volume. Then I like to see the sellers weak. When the sellers are weak, when the buyers take it again, higher low, let's go. That's it. See the same thing back here. It was kind of consolidating. That's a higher low there, and then another, and then another, and then another, and then another, and that's what kicks the uptrend. Does the higher low always equal an uptrend? No. Does every uptrend start with a higher low? Yes. Right. So that's what makes it trading. Yeah, I like that. Good stuff. Good stuff today. The secret proprietary list. Yeah, I could tell you, but I'd have to kill you. All right, I'm gonna call it a day. We got through the list. We're close. There should be some things setting up. We should be locked and loaded and ready if we get the signals. Do they come today, tomorrow, sometime? As you look at what's leading the market, tech, communication services, and a couple pieces of consumer, they're moving into position. The cyclical looks good. The model still likes the way the market looks. Okay, it's not fantastic, but we've got some ideas to trade, and we'll go from there. So, wonderful. All right. Well, listen, everybody, it's good to see you. Let's meet up tomorrow. Have some coffee. Talk about the market. See where it puts us. Have a wonderful rest of your day, and as always, happy trading.